Well, welcome everybody. This seminar is called Everything You Wanted to Know About Credit Card Processing and Some Things You Didn't. We welcome Cheryl Helt. She's the National Sales Manager for International Payment Solutions, LLC. She's also a licensed insurance producer with a special interest in working with senior citizens. Prior to working with the payment card industry, she worked as a legal assistant for more years than she cares to admit. She now writes articles on the payment card industry, which have been published nationally, and has conducted her first webinar on credit card processing. When she isn't working, you can bet she's spending time with her grandchildren. And when they're sleeping, she's reading a good book. Welcome, Cheryl.
Thank you. Thank you very much. Thanks for getting up early and coming this morning. I really appreciate it. And I always tell everybody that's 3 strikes against me. I'm an insurance agent, I work in credit card processing, and I used to work for lawyers. So look out. But we're gonna kind of hurry today. They tell me you guys are on a really tight schedule. So what I'm going to do is try to get through the presentation and leave time for questions for you. If you have something relevant along the way, please let me know. But I think that way, we'd like to save room for questions at the end if we possibly can. Okay? So we got a couple more people coming in. All right. So again, good morning. Thank you for coming. I'm Cheryl Helt. I also want to introduce you briefly to Deanna Townsend. She's actually one of the owners of our company. Credit card processing is our business, and that's what makes us the experts. So here we go. Is that how you feel every time you open your processing statement? Most people do. That's right. Well, today here's what we're going to do. We are going to begin basically, we're going to start with how to read your statement. A lot of you come to me and say, you know what, I don't even look at the thing. I just throw it in the corner, can't read it. We're going to show you a little bit how to do that. We're going to go over a couple different statement types, retail, interchange. We're going to show you some tricks of the trade. We're going to talk about some new things that are happening, things like PCI Compliance, IRS Reporting. We're going to try to cover a little bit on contracts. We're going to cover a little bit on equipment. So we've got a lot of material to cover. So we'll begin first with how to read your statement. Now, a lot of you maybe don't even know what you're paying. So we're going to do one basic exercise this morning. We're going to teach you how to calculate your effective rate. So you've got some idea what rate you're paying. For this particular exercise, we're just going to use some easy, even numbers, and we'll go from there. But what you're going to want to do to calculate your effective rate is you're going to want to look at your statement and find the total amount, the total processing cost. In other words, that sum that they deducted out of your bank account. For purposes of this, we're going to use $200. The next thing you're going to want to do is you're going to want to find the number of deposits. In other words, how many dollars in transactions did you do? And in this case, we're going to say you did $5,000. Find those two numbers. Then you take the $200, you divide it by the $5,000 or the total number of deposits, and that's going to give you your effective rate. Now, in this particular instance, the rate is 4%. If you're seeing a rate of 3 or 4%, that's a really high rate, and you're going to want to pay attention to that number. Now, another important thing to remember, when you're looking at your total processing volume, in other words, how many dollars did you take in, you need to subtract American Express. If you guys are taking American Express, you need to subtract that amount because, as you know, that's a totally different ballgame. You get a different bill for that. So if $1,000 of that is American Express, you need to take $200 divided by $4,000, not $5,000. And by the way, that increases your effective rate up to 5% then. Then you're really in trouble if you're really paying that kind of money. Now, we say the range you should be looking for an effective rate, depending on how you're taking cards, somewhere in the neighborhood of 2.3%, 2.4, something like that. It depends on how many cards you're keying. If you're keying a lot of cards, it might be a skosh higher than that. But anything, you start seeing things upwards in the high 2s, 3s, 4s, you need to know that and you need to be doing something about it.
2.3% to what? What's it?
Well, it depends on how you're taking cards. 2.3, 2.5, somewhere in there. Like I say, you start getting up to 2.7, 8, 3. That's getting high. There's some things we can talk about that. If you're taking a whole bunch of expensive cards like war cards or something, that might be a little different story. But anyway, you're going to want to be looking more in the middle 2s. Okay. Now, another thing we're going to watch for, and we'll talk about it a little bit more in detail, is daily settlement. A lot of times you'll look at your statement and you'll say, oh, they charged me $200. But some of you are on something that's called daily settlement, where they take a little bit out each time. We'll cover that a little more later. So now we know your effective rate. You've calculated it. You don't like it, or maybe you do. But now what we need to know is, what kind of a program are you on? How are you being charged? Are you on a retail program, an interchange program, some combination? You know, what is it? First, we'll cover the retail program. If you're on what we call a retail program, you are going to see your charges lumped into basically 3 categories. You're going to see a qualified rate, a mid-qualified rate, and a non-qualified rate. And I think a lot of you are probably still seeing that. Now, if you're in a retail program, one thing you probably don't know is that your processor has the freedom to place your card types in any category he wants to. Yeah, I mean, he can take rewards cards and put them in any category he wants. Usually, the way it works is the qualified category is your cheapest cards. That's going to be your debit cards. And the reason debit cards, there's a couple chairs here. The reason that debit cards are cheap is they cost less because they go right to your bank account, right? I mean, people who swipe their debit card, the money's there, or it's not, it's accepted or rejected. There's no risk in that card. You know, so that's going to be some of your cheapest type of cards. It may also contain regular consumer cards. These are the cards that don't carry any perks. There's not too many of those out there. But those 2 card types might fall into your qualified category. Now, next would be your mid-qualified rate. That's going to be a little more expensive. A variety of card types could go in the mid-qualifieds. Some companies might place rewards and world cards there. And you know, those rewards cards, those are the ones that have cash back, bonus miles, all that kind of stuff. Those are more expensive cards. They have a higher cost. So it's going to cost you more to take them. And you know, so I think something like 60% of all credit cards right now are rewards cards of some sort or another. People like them. They like to use them. But I'll tell you this, most companies are not going to put reward cards in your qualified rate. They're not going to charge you that lower rate for those. Now last are your non-qualified. And again, a lot of cards could go here. These might be keyed cards. A lot of you manually enter cards for reservations. People call you up, you enter into the machine. A lot of you do that. That's a higher cost card. You could be getting charged non-qualified rates for those keyed cards.
Someone makes a reservation over the internet.
Those are moto rates, and they're going to go in the category of keyed cards. So again, depending on what kind of program you're on, they could fall into mid or non-qualified because they're considered a hand-entered card. Yes. But if you see these 3 tiers, or 1 or 2 of them, you know, some of you maybe never take a swipe card, so you're only going to see qualified or non-qualified. You know, that's a way to tell. But if you see categories like this, you're on what we call a retail program. And again, processor can place the cards anywhere he wants, and you really don't have a way to know what cards are in what category. Now, another thing to note, too, is you're going to see significant jumps in these tiers. You know, like, for example, your qualified rate might be a 159. You know, that's the one that your processor sold you on, right? He came in and said, hey, I can give you a 159, and then he shuts up, and he doesn't say anything else. Well, that next rate, mid-qualified, that might be 239 or higher. And non-qual, that could be 3% or higher. The thing to know is that the cost, the jump in cost between those levels is not as high as the jump they've made. You know what I mean? You might only be a 1/10% difference in cost, but they might have bumped you up 0.5%. It can be a significant difference.
What you're describing is highway robbery.
Yeah, this is a non-regulated industry. Yeah, we're talking about credit cards. And unfortunately, it's a non-regulated industry, and they can do what they want. And there's little you can do about it, unfortunately, at this point anyway. Now, this is an example of a retail statement. I apologize, it's a little bit fuzzy, but what I want to show you here is right up there, you see that 1.84%? That's what you think is your rate, right? You're looking at that and you're thinking, oh, I got a 1.84, that's not too bad. Well, first of all, let's calculate the effective rate. We take the 1.84, or I'm sorry, the total charges there, they come up to, I can barely read it myself, but it's something like 300 and, I got to look at my notes here. It's $300 and some odd divided by the total deposits. Well, when you do that here, you know, you think it's a 1.84, but it's not. Because look at this little line down here. See that little line that says non-compliance surcharge, $135.36? Well, what's that? Who knows? But look, $15,000 of the $20,000 deposit fell into some sort of non-qualified category. Well, if you do the effective rate on that, if you take the 135 divide it by that, you've just added another almost 9%. Now your 1.84 just became a 2.72. And you're thinking all along that you're paying 184, right? And all this other stuff is whatever it is. You know, it's a way that they hide things. You can't tell what card types you took. You don't have any idea why you're getting charged this. You just got this lump figure that says, okay, I got to pay more. But you really don't know why. Okay, now here, now we're going to talk about what an interchange statement is. And I've just gotten ahead of myself here. Sorry about that. What is interchange? Do you ever wonder how banks make their money on credit cards? Not at all, not at all. Well, a lot of us might think it's interest, right? I mean, they're making money on interest. But there's an awful lot of cards that get discharged in bankruptcy. There's a lot of people who pay their bills off every month, and so they're not making interest. They're making it on what's called interchange. Every time a transaction happens, whether it's swiped or keyed or happens over the internet, a percentage and a transaction fee gets paid to the bank that issued the card. Every transaction. They get a little piece of that pie. Okay, then after that, that's what's called interchange. Interchange is the actual cost of the card. Now, in addition, on that same swipe, another percentage, right now it's 0.11, it's 11 basis points, gets paid to Visa, MasterCard, Discover, whoever the card holder is, or the issuer of that card. They get another little piece of the pie. Those two things, plus a couple more transaction fees we'll cover in a minute, are what I collectively call interchange, and it's the cost of the card, and it's the same cost for everybody who offers you credit card processing. Same for me, same for anybody else. They all begin with this cost. Now there's a couple more transaction fees. One is called NABU. It's I'll have to tell you what that is. Tell me NABU, Dee.
Network access.
Network brand usage fee. That is MasterCard's. It's a 0.0185%. It's another cost that we have to pay. And Visa calls theirs APF, which is an acquirer processing fee. So all of these things together, interchange, dues and assessments, these two transaction fees, these all combine. When you hear me refer to interchange today, that's what I'm talking about. Interchange is this basic cost of the card. Okay?
That falls on us?
Yes, you pay that. Absolutely. That's how we begin. This is how the banks and the credit card company makes not the credit card company, but Visa, MasterCard. This is how they make their money. Anything from this point on, the difference between this and what you pay is profit for the person who's giving you your credit card processing. That's the difference. Okay? Here's
What percentage is that?
Whatever they want it to be.
Whatever they want it to be. That's why I'm having you calculate your effective rate, because if you see that you're paying 4%, and you see that the cost of that card is something like a debit card is way under 1% and you're paying 4%, you need to be doing some shopping. You need to be doing some looking. Well, there is no typical. The interchange tables are 10 pages long. There's hundreds of cards out there and they each have a different, so that's part of the problem. You don't know. And you just don't have that conveniently available to you to know. But we'll kind of help you understand that a little bit more today. This is an interchange statement right now. This is a sample of it. Now, again, it's a little hard to read, but you'll notice that each card type is set out. We've got some Merit 3 cards. We've got some commercial cards. And what this is supposed to be disclosing to you, the interchange rate. You see this right here? It says it's 0.195 and so on. All of those rates, this is an interchange statement. Whoever has this statement is on an interchange program. And what that means is your processor is passing along the actual cost of the card to you plus their markup. And in this case, their markup is 30 basis points. So they're making $30 for every $10,000 you do. Right here. It isn't always so easy to see on your statement. That's the problem. You aren't always going to be able to look at your statement and know. But if you see a whole big breakdown like this, one of you came to me yesterday with an interchange statement and said, there's all this stuff, and I said, that's actually good. They're actually disclosing to you what you're paying and for what cards. We prefer interchange. We like this because you were talking earlier about transparency. This is transparent, at least to a degree, and we'll cover that more a little bit. So if you're on a true interchange program, what should be happening is the processor is going to pass along the actual cost of the card, in other words, the interchange, the dues and assessments, the transaction fees, plus their markup, generally measured in basis points, And that's what you should see. So in this way, you're going to know every kind of card you're taking, you're going to know what you're paying for it, and you're going to have an idea what your cost is. You're also going to have an idea who your clientele is. What kind of cards are they using? If you're taking a lot of corporate cards and expensive cards, well, that kind of gives you an idea who your clientele is. So now here's another example of a statement you might see. This one's really fun. This one tells you nothing. It's a little harder to see this here, but you'll see that they got charged $311.83 here, and they took $11,000 in cards. But what else does it tell you? Well, it says you took $7,000 here and $3,000 here, but that's it. It doesn't tell you anything else. When you do the effective rate, it comes down to 2.87%. In other words, you divide that 311 by the 11,000. It's about a 2.87, almost 2.9% effective rate. But you have no information. If I came to you and said, hey, I'd like to do an analysis for your, I couldn't do anything with this because I don't have any idea. Did you take debit cards? Did you take, and you don't know either. All you can do is calculate your effective rate and have an idea what you're paying. So you've got an idea.
What kind of program is this?
This would be a retail. This would be a retail statement. Because that's all they're telling you. You think, there's nothing disclosed. But it would be retail, as far as we can tell. Now, I referred to this earlier, something called daily discount. Now, there are some industries that have to be on daily discount. I'll explain that in a minute, but you guys don't have to be. Daily discount is something that I like to call, something to keep you completely confused. This is the front page of an average statement, right? You see a couple, you see interchange charges, you see service charges, and when you add those two things together, the cost on that particular slide is, I'm looking for my numbers here, it's $163.94. Trust me to do the math. These two things add up to about $163. So again, if you calculate your effective rate, you take that and you divide it into the $6,223, you come up on this one with an effective rate of 2.57%. Not horrible. Not bad, right? You think, well, I don't have such a bad deal. Until you look at the next page. And again, this is really hard to see, but this is an example of a daily discount statement. Every deposit that you made, starting at the top here, you think you deposited $200, and here they've deducted like $8 or $9, and less than $200 was deposited to your account. And they've done that every day with every deposit. And you didn't notice that, Every day they've already taken some out. Well, you think, hey, I've only got a 257, I only paid $167, that's a good deal. Nope, not so much, because you've also got to take these figures into consideration. So you watch for a sheet like this and look to see if there's anything else deducted that you didn't notice. Don't just rely on that first number on the statement.
Why would the discounts taken here show up on that first page?
Because that would be disclosure. They would show you that, right? Now, there are, like I say, there are some industries, restaurant industry is one. Rules say they have to, but you guys aren't one of them. You don't want to be on daily discount. It's an accounting nightmare. You want to know that if you took $200 in yesterday, that $200 went to your bank. You don't want to know that $195, how are you ever going to track that stuff? You need to be on a monthly settlement where once a month your total charges are disclosed. Yes?
And I see what that's saying is they're taking your fee
Daily.
But do they then charge you another fee
Yeah.
after that?
That's what was on the front. That was what was on the front page. That's what you think you paid. The rest of that stuff came out every day of the month.
To really calculate that, you would go through,
You have to go through and add all that up.
you would add up all those discounts.
Yep. And then you'd add that to what they deducted off the front page.
So are these daily, daily things, or are they each transaction?
They're each deposit at the end of each day. Yeah, so at the end of each day, they've taken this much and this much and this much. Yes. So watch that. Watch for that. Watch your statement for that. Now, some other little tricks of the trade. You've seen an interchange statement, so you kind of have an idea what they look like. That's the one, of course, where they listed every card. But one of the things that happens, again, you were asking me earlier, what are the interchange rates? Well, how do you know? And that's one of the tricks of the trade. A lot of processors will they'll show you, they'll list everything out, and then they'll bump that interchange rate just a little bit. So let's say that a true interchange rate is a 0.95%. They might bump it to a full percent. You don't know. You think you've got a nice looking statement there that says, oh, here, and they're disclosing this is all very good. And they're bumping those, a basis point or 2 or 5 or whatever, and you don't know. You just think that that's all being disclosed to you. It's one of the ways they do it. It's one of the ways they boost their profits and make it look like they're doing you a really big favor. Now, another thing, this is one that I love. You remember that first statement? Posting your preferred rate. A lot of times on the front page of your statement, you'll say, you deserve a 159. And then they don't say anything else. But if you actually go line by line through your statement and start doing the effective rate of each line, it's a whole lot higher than 159. Or you might have a statement like that first one where they just bump a whole lot of charges in one little lump sum. You have to take all of those into consideration. Chances are you're not paying that 159, even though it's posted right there on the front. Now, another really cute thing they do, I really like this one, because I've been fooled by this one, right here. They just print the rate on the first line. And if you do the math, 64 into 34, it comes up to that. Then they let you assume that that's a 189 carried all the way down. But it isn't. That second one, I think, is a 239, and the third one is a 329. And if you don't do the math line by line, here you are thinking, oh, I got a 189. That's a pretty good deal.
How come
You know?
you haven't been sued?
What would you sue them for?
Are you kidding?
Oh,
Fraud.
Yeah, but
Go down to your local district attorney and say, hey,
I'm with you. I'm with you. But you know how many of you don't even look at your statement? How many of you take it, see what got out of your checking account, and throw it in a drawer? And that's what they're counting on.
Yeah.
How many of you sit down to actually do the math and figure out what you're doing? You don't. You don't have time, or you think you don't have time, but that's how they're getting away with this stuff.
you have to hire an accountant.
You do. You do.
And accountants can't do it either.
And
You
yeah,
got to make sure he knows what.
I'm telling you, we've seen statements that we can't figure out, and we're in the business. So, I mean, the idea is to trick, to confuse. Now, oh, yes.
I'm sorry.
Go.
I am brand new at this. I haven't even seen the statement yet, but when they just signed me up a week ago, they signed me up for a flat rate.
Oh. Very briefly, not a good idea. We can talk more about that later, but that's not a good idea. But just for what I've talked about, interchange. Debit card rates, regulated debit card rates, for example, cost you about 0.31%. Did they give you a nice 2 point? Exactly. You know, not a good idea. But we can talk more about that later. But yeah, flat rates are never a good idea. Never, ever, ever.
Cut to the chase?
Pardon me?
Can I cut to the chase?
Which is?
How do you make your money?
We'll get to that. I'll show you. But first I want to show you something else, because this is going to make you even madder, unfortunately. There's also some... I'm sorry, this isn't going to help, so let's get through all the bad news. There's also something called enhanced billback, or EBB. So if you're looking at your statement and you see EBB or BB or something like that, I call it a way to keep you completely confused. Enhanced billback is a proprietary thing. It belongs to First Data. A lot of you have seen First Data on your statements. We'll talk about them too in a minute. But here's what they do. What enhanced billback means is that you are paying the cost of one transaction over the course of 1 or 2 or more months. Look at this statement. This is a June statement. I know you can't read it, but if you can see here, here's still May charges on that May statement, on that June statement. I mean, and so on and so on. And you might see the July statement, and there might still be May charges on it. What they do is in fact, I did a statement the other day that had $700, and it said you were charged this, but it hasn't been funded yet. So they hide. So how in the world are you going to track a $200 transaction when a piece of it came out in May, a piece of it came out in June, a piece of it came out in July? You're not going to know. And we see this a lot. And it doesn't really tell you anything else either. It says you took a MasterCard, we charged at this particular rate, but then next month you might see that same card. You know, your transaction numbers don't match up.
So you can't calculate.
You can't calculate anything. It's why you throw your statement in a drawer, because you look at it and you say, I can't figure that out, and I got to pay it, so I'll just do it. You know, but these are things that you need to be aware of and try very hard to get away from. You don't want to be doing this. Now, what is all that other stuff you see? You've probably seen some form of this, you know, on your statements. NABU, APF, we've already talked about those. Those are the transaction charges that MasterCard and Visa charge. Next one, AVS. You guys are keying a lot of transactions. Are you answering 3 questions every time you key a transaction into your terminal?
Yeah.
Yeah.
You should be answering 3 questions.
Expiration date and the security.
No.
No, zip code and
Address,
address.
zip code, invoice number. If you guys have terminals, they should be programmed every time you hand enter a transaction to ask you those 3 questions. That's AVS, address verification. Yes.
So the 3 questions are what?
Address, zip code, invoice number. Now, if you don't have an invoice number, don't worry about it. Just use the last 4 digits of the card. You just need to put something in there. But if you do not answer those 3 questions, you get bumped to a higher rate.
So
A lot of you don't know that.
I was thinking that if you just put in your zip code, that would be
It is not sufficient. You have to answer all 3 questions, or you get bumped into a higher rate category.
To try to put, an address.
Oh, no, just numeric. Just numeric, just the numbers. I live at 23237 Town Line Road. All you'll put in is 23237 for the address. Zip code 61046, invoice, last 4 numbers of the card. Just numeric. You don't have to type in the name of the address. Just the numeric portion of the address. Okay, that's AVS. There is a cost for that, and it's there for a reason. If you do not answer those questions, you're paying higher rates. Plain and simple, yes.
So is that the least expensive AVS?
No, any card that you're hand entering into the terminal. If it doesn't, you need to be calling your processor right now and saying, why isn't AVS on my terminal? You need all 3. You need to call your processor and say, I need AVS, full AVS turned on in my terminal. Yes?
My processing company always says mismatch.
That's okay. That's okay.
If you attempt it, is as good as doing it.
Wow.
Yep, exactly.
You
But
just
you
have to
but you
attempt.
got to answer them. If you yes, sir.
Mine won't go through unless I answer all.
Good. That's how it should be. You need to answer them, or at least attempt to answer them, and then you're okay. Then you're going to get the best rate you can. Yep. But not all processors program their terminals to do that. You're lucky.
What you're talking about is not swipe cards.
I'm talking keyed cards, hand-entered cards. Not Swipe. Don't answer that. Don't worry about swipe. But if you're hand entering, and you guys are, because you're taking down payments and things. Okay.
So the invoice number. Make sure I understand. The invoice number you're talking about. Like I have.
If you don't have an invoice number, just use the last 4 digits of the card.
Okay.
Just put some 4 digits in there
Okay.
and answer the question, even if you don't.
In addition to entering their address and their...
Those are the 3 questions: address, invoice, and zip code. When you're hand entering, all 3 questions. We'll talk later. Yeah. Okay. I better move on because it's already 9 o'clock. Yep.
When you're dealing with someone from a foreign country, how do you handle the zip code situation?
Just put in 5 digits.
Anybody?
Yep.
You
Just
can
make
put your zip code in.
Put
and
yours
that'll
in.
be fine.
Put yours in. Absolutely.
So it doesn't even cross-reference?
It does cross-reference,
And that's why you get the mismatch.
but it doesn't care if it's wrong because people move and don't change their addresses right away, or
Yeah,
their
it's just an
systems aren't
attempt.
updated, as long as you attempt.
Yep. Exactly.
I
So
always
that
put in my own zip code.
that's
That's-
great. See, that's perfect. So that's AVS. Transaction fees, we talked about a bunch of those. You know, there's NABU, APF. Also, people like us who do credit card processing will add a transaction fee. That's one of the ways we make our money. PIN-based debit, that's exactly what it says. If some of you have PIN pads to run debit cards on, that's the feature that lets the debit cards run along the financial highway instead of the credit card processing highway. Batch header fees, you guys have seen those. Every day at the end of the day, your terminal batches, either you do it or it does it automatically for you, and there's usually a charge for that. Visa cross-border fees, those are your international cards. Those are fees you're going to pay if you're taking international fees. And PCI, non-compliant surcharge, we saw that on the first statement. All those dollars bumped in, didn't really know what it is. Sometimes that refers to PCI compliance, which we'll cover a little bit later, sometimes not. But this is a place where they can dump a lot of fees, and you don't really know what they are. Statement fees, most companies are going to have a statement fee. We have a cost. Whenever we board an account with our banks, they charge us an on-account fee. We pass it on to you. So you're going to see statement fees, and they are relevant for the most part. So in summary, here's what you need to know. You need to know your effective rate. At least have some idea by doing the bare bones math what you're paying. Are you paying 2.5%? Are you paying 4%? I had a guy the other day paying almost 6%. Didn't know it. Know what program you're in. Are you in a retail program? Are you on an interchange program? Okay? Calculate your real rates. Take time to go line by line through your statement if you can. So they're not pulling that little trick on you, making you think you're paying a 184 and not doing the math. Do it. And read your statement messages. That's the most important advice I can give you today. I know you don't like to, and it's usually in fine print. Read your statement messages, because your processor is required to give you notice of the stuff that you need to know. They got to tell you about rate increases and stuff, but if you don't read them, you don't know. And the second that you swipe a card after that comes, you've accepted it, whether you like it or not. Read your statement messages. Your processor's counting on you to not read them, okay? Now, IRS regulatory reporting. Probably a lot of you have already seen fees for IRS reporting or some kind of things like that. Here's what's going on. The IRS has implemented some new reporting rules. It used to be that money that was run through a credit card machine did not get reported to the IRS. Wow. Well, they figured that out, that they were missing a bunch of revenue. So now they've instituted these new rules that say this income has to be reported. But what has to happen is Social Security numbers have to match up. So if your terminal is set up as, you know, the Franklin Inn under a federal ID number, but you actually file your personal tax return under Bill Smith, under your personal Social Security number. In other words, if the numbers don't match, if you do Schedule C instead of however it is, it's going to send up a red flag. Okay? And IRS is going to say, hey, something's wrong here. And if they find that something's wrong, beginning January of next year, they're going to start assessing a penalty. They're going to withhold 28% of your proceeds until those numbers match. So it's very important. If you get a notice from your credit card processor, like with a W-9 or something, say, fill this out, we need to know it matches, do it. It's very important. Because here's the other thing to know. If they withhold that money, oh, and by the way, if you're in California and New York, they could take another 12%. So it isn't just 28, it might be up to 40%. It could be that much money. And here's the thing. Say next January you are not compliant. Okay, so they take a penalty. Guess when you get to collect that penalty back after you've made it right? Not till you file your tax return. You don't get the money back right away. You will wait a whole year until you file your tax return for that year to get any penalties back. So make sure you're right with it. If your processor's calling you, sending you forms, fill them out, send them in. You don't want to be not matching come January 1. Yes?
I think just before I left, I got a request for a 1099 from my credit card processor. Does that make sense?
You mean a W-9?
Yeah, probably.
Yes, that's it. That's what they're doing. They're looking to
I
verify.
just got it.
Yep, fill it out, send it back. Because you need to be sure that your processing proceeds match how you file your tax returns in terms of Social Security number. Absolutely. Do it. Don't waste time.
Do you
Okay?
have to put everybody's Social Security number on there that's would
No.
be filing off
No,
the business,
the
or just
file.
one person?
Yeah, the majority. So like, for example, if you and your wife,
Partner.
say, are filing, and you file under Schedule C, it's whoever's social is first.
Okay.
You know, or if you're filing a schedule, is it a Schedule K where you actually attach a business form, you know, and you're going under the name of your in under that number, whatever it is, it has to match up, but not both, just whoever's first.
Okay, what
Okay.
about if you have a partner?
Well, again, like with us, my husband's number is first, so his is the number they would look at first. Right? You're frowning, Dee, is that?
Right, no, it's whoever the majority owner on the.
Yes.
If
Business.
you're both on there, you could, as long as one matches, if you're both partners on the business.
But
as long as
somebody's gotta
one of them
match.
matches.
Gotta
And then
match.
it'll be reported under their Social Security
Yeah.
number.
But if you have an ID federal number, you could.
Or the corporate, if you have a
Yes,
federal.
as long
if
as
you're
they match.
incorporated.
The key is that they match. If they've got one number and your credit card information is coming in and something else, that's the red flag. They got to match.
And you'd be surprised how many tax IDs are mistyped by the credit card processing
Yeah.
companies in your application, and they just fly through it. They don't even get caught.
Yeah,
So-
but if they're asking you for it, do it, because you don't want to pay that penalty and then wait a year to get your money back. Now, the rule right now is if you're doing more than 200 transactions a year or $20,000 in business, you must comply. Some of you may not be that big, but, you know, it's
No,
something
let me clarify that. You must comply. There is no.
Oh, yes.
If you do 200 or more transactions or $20,000, you will get a 1099 at the end of the year showing your proceeds. It also should be printed on your, they're supposed to be printing them on a monthly basis on your credit card statement showing what your totals are for the year. So they will let you know that.
Yep.
So there is some regulation.
There is
There
some,
is
but
definitely.
it's all about collecting taxes. It's really not about making things better for you.
So what is this rule called?
Well, what is it called? It's IRS regulatory fees. It's and
There's
that's
a
what you.
direct tax ID
New
number,
tax
but I
thing.
don't know the exact IRS
Yeah.
regulatory.
But if you see a regular.
Sure, I'm doing it. How do I know? What do I do?
Well, if you haven't received any notification from your processor that things are wrong, you should be fine. But all of a sudden, come next year, if you find out that there's some money withheld from your credit card processing proceeds, then you know something's wrong. But they should be on top of it. I mean, we've been working for a year to make sure all of our merchants match up.
You can also call the number on your statement and say, hey, I've heard about this, can I just confirm it?
That I'm
And
okay.
they'll confirm it for you.
Yeah.
So if you're not matched up, the withholding of 28%, how does that get paid? How does the IRS get that?
The credit card companies have to
Withhold it from
deposit
you.
that. They withhold it and deposit to the IRS every
Before
month.
they deposit it in your bank, they
You don't even see that
You don't even see it.
28%. You get anything after that. That goes right to
It's
the
gone.
IRS into your tax
Yeah.
account.
So don't be in a position of getting penalized.
So it's just like federal withholding.
Exactly. It's like
Yes.
having a withholding tax.
Yes, well said. Absolutely. Okay, now let's see. Did I go too fast? Okay, now we're going to move a little bit away from numbers and a little bit more about some contract issues and things that you need to be aware of. First of all, early termination fees. This is a big thorn in my side. Early termination fees, do you know what they are? They're a penalty that most companies will charge you if you end your contract early. Some companies will charge you if you leave at all. I know of a couple that say you got a termination fee whenever you leave. I don't care how long you've been with us. They can range from a few $100s, a fixed, like, okay, it's a flat $195, $295, to tiered schedules. We've got some companies that, the first year it's $795, second year it's $595, and so on, all the way down to, some kind of a percentage. So you need to know. Now, there's another kind, and of course these fees, if you do decide to leave early, same thing. They'll deduct it right from your bank account. You won't see it. It'll be gone. Now, there's another kind of termination fee that we're seeing that we want to make you aware of. There's something called a lost profit clause, and they're getting built in more and more to these contracts. They're kind of a sneaky little thing, and what they say is if you end your contract early, you basically have to pay us because we expect to make a certain amount of money from you over the course of your contract. So let's say your processor was planning on making $100 a month from you, okay? If you end that contract 12 months early, guess what? You pay $1,200. It's a lost profit clause. So it's their way of saying, hey, if you leave early, I'm still going to get my money, whether you like me or not. So what's it doing? I mean, it's a way of making you stay. There are several reasons to have these. Obviously one is to prevent you from canceling your contract. Because who wants to write that check? Nobody. You don't want to do that. But there are a couple of other reasons that they might be doing that as well. And one of them is free equipment. How many of you have free equipment? I've had a lot of people will say to me, hey, they gave me free equipment, it's such a good deal. Well, guess what? It isn't free. There's nothing free, I mean, they're either going to boost your rates or they're going to charge you that early termination fee so they can get that terminal paid for. And of course, obviously, it ensures that the credit card company makes a certain level of profit. Same idea as monthly minimums. You guys are getting hit a lot with monthly minimums, right? Oh, you didn't process any, but all of a sudden you got a $25 charge on your statement because the company didn't make enough money off of you. Same idea. We're going to make money whether you do or not. So, I mean, you need to be aware. You need to read your contracts, because these early termination fees have nothing to do with your benefit. It's all about your processor. Contract renewals is another thing. I've had a lot of people, they'll say, hey, my contract's up in October, call me in October. Well, is it? That's what you need to know. Most contracts begin with a 1 to 3 year commitment, depending on who you're with. And pretty much all of them have a built-in renewal. If you don't cancel that contract within a certain period of time, 30 on up to 120 days, that contract automatically rolls over for another term. And the second it rolls over, all those terms that you don't like early termination fees and all of those things, roll right over with it and you're stuck again for another however long period of time. So what you need to do is be sure you know where you stand. You need to read your contract, you need to call your processor, find out when your contract ends, what kind of notice you need to give, especially if you're unhappy. If you're happy, great, that's fine. But I think it's really important that you know where you stand. You need to have options. You need to know. And the other thing we always tell people is if you are unhappy, don't call your rep. Because he's not going to call you back, especially if you're somewhere close to a contract renewal date. He's going to call you up after your contract rolled over. If you need to know, you call the 800 number on your statement, and if they can't help you, you keep asking for a supervisor until you get the answers that you need to know the status of your contract. Okay? Now, I mentioned free equipment. Well, equipment, leases, terrible. Don't do it. Free equipment, there is no such thing as free equipment. Like I said, you're going to pay for that terminal some way or another. You're either going to pay for it in inflated processing rates or you're going to pay for it by that termination fee. Okay? Just because you haven't written a check for it doesn't mean you haven't paid for it. Now, another thing that we find very, very important is equipment leases. Whatever you do, never, ever, ever, ever sign a lease for equipment. Don't do it. They're well written. They were written by lawyers. So there you go. They're pretty much ironclad. I mean, we've found most people, if they're in a contract, a lease for equipment, you're stuck. There's no getting out until the thing is over. And think about the math. Let's just do a cheap contract. We see leases for $29.95 a month, right? 4 years, $29.95 times 48 months is $1,437.60 for a terminal you could have bought for $200. Yes, sir.
Yeah, I know. I've paid for about 6 terminals worth of the lease was.
Exactly. Exactly. And what'd you get for it? Most new terminals come with a year warranty anyway. You can buy a lot of terminals for $1,500. And like I say, once you're in that lease, you're stuck. There's no getting out of it. I mean, you can fight with them, but I'm telling you, they're going to make your life miserable. You know, and don't tell me that you get free paper either. Come on, go buy some paper. You know, buy a terminal for $200 and go buy some paper. Don't fall for that. You know, I don't care how cute the salesperson is or how honest they look. Don't do it. It's just a bad idea for you. It really is. And another thing that you need to be aware of is you get to the end of that contract, you think you own that terminal, right? No, you don't. No, chances are your contract is going to have some kind of a buyout clause. It's usually 10% of the original purchase price. For you to keep that terminal, you've got to pay them several hundred more dollars. I think Dee looked, and the average right now of buyouts is something like $595. So you leased it for 4 years, you paid $1,400, and now you got to pay them another $500 if you want to keep that terminal. Do not lease equipment. Please. Please don't.
Excuse me, you can buy terminals on eBay too.
Yeah, you can. You absolutely can. The only thing there's two things you want to watch for. One is proprietary equipment, and what that means is some equipment will come to you, and a lot of these lease terminals will, proprietary. Nobody else can work with them. You know, they've got something in them called a lockout chip, which is programming so that nobody else can come in and put new programming in the machine. They're going to make sure you stay with them and that nobody else can work with it.
eBay has that too.
Yeah.
So you have to watch.
You have to watch for that.
Because some of the processors will sell them on eBay, but you can only process through them.
Exactly.
At inflated rates.
At an inflated rate. Yeah, so you want to watch that. You want to be sure you're buying equipment that anybody can use. Okay? So that's the end of the processing part. I will move quickly to PCI compliance, and then hopefully we're okay. We still got.
Quick question
Please.
on equipment.
Yes.
I bought a piece of equipment a year later. I was having problems with it. I asked, and they said, the people that I bought it from said it's non-compliant.
Okay, we're going to talk about that here shortly. Yeah, non-compliance. That's a big issue. That's another big sales tactic, basically. That has to do with PCI compliance. And what they're telling you is that, yeah, there are some reasons, but we will cover that, and if I still haven't answered your questions, ask me again. Okay, so what is PCI compliance? Well, an independent council was formed by all of the major credit companies for the purposes of managing credit card processing security standards. That's what that's about. They were basically tasked with the job of how to keep credit card information safe when it's flying around, especially on the internet. Why do we need it? Well, before this council was formed, there were some major breaches. Some companies like TJ Maxx, Heartland Processing, several companies got breached, and a whole bunch of processing numbers were stolen. So this council was formed to prevent that, and that's how PCI compliance came about. So what does it mean to you? First of all, everybody who takes credit cards has to be compliant. You've got to prove your compliance. How you take credit cards has to do with how you prove your compliance, okay? So if you are using any electronic processing methods, if you process over the internet through a gateway, like Plug and Pay, PayPal, Opt-on, anything like that, or if your customers email, e-fax credit card numbers to you, anything you receive over the internet, then first of all, the other thing, if you're storing any sensitive information, in other words, if somebody gave you a credit card number and you typed it in your computer and saved it for later, you know, don't do that. But all of those things make you liable. You have to do, first of all, the self-assessment questionnaire. There's a 4-page survey that you got to do, and you are subject to scans of your IP address. Yes?
I was just at that point before I came to the meeting of filling out that long questionnaire, and I had no idea how to answer anything.
Bring it over. We'll help you later. Yeah. It's not as bad as it looks, but basically the idea of this form is to let them know how you're processing. Are you taking cards over terminal, or are you processing over the internet? And if so, like I say, if you're doing anything electronically, any of these things, you're going to have to submit to those quarterly scans that are performed by an approved scanning vendor. Now, we'll talk about reservation software here in a minute, because a lot of you are using reservation software, so this is kind of important. If you're using software and people are booking, like say with Reservation Nexus or something like that, if they take the reservation, run the transaction, and keep the information on their side, they're the ones that have to be PCI compliant. Okay? But the minute that they transmit that card information to you, or that you enter that information on your own side, you are also subject. It isn't the software that keeps you safe. It's where that transaction took place. So as long as they're handling it over there and all you're doing is getting an email that says it's booked and paid for or something like that, you're okay. But the second that that sensitive information comes to you or you input it on your side, you are also subject to the scans. Okay? So if you're using a terminal only, in other words, processing with a terminal over a phone line, a lot of you are doing that at your front desk, you still have to prove compliance. You've got to fill that form, but what the form basically says is, you know, hey, I process through a terminal. And then they know that that's what you're doing and you're okay. A terminal can't be hacked. You know, a terminal is always the safest way to take credit cards because, you know, it's not going over the internet. It's transmitting over the phone line. So as long as you do that proper SAQ, you're fine. So how do you get that done? Well, that depends on your processor. MasterCard and Visa did set up a free website, and that's the address right there. It's www.pcisecuritystandards.org. And if you go to that website, it's free. All the forms and everything that you need are available there. In fact, I got a couple screenshots of what it looks like. www.pcisecuritystandards.org. Here's the first page of it. If you look, you know, you go right here. It says, there's somewhere here that says Merchants. You click on the Merchants button, and then that brings you up to this page right here. And then if you scroll down onto that page, here's everything you need to do. It's got all the forms and all that kind of stuff. You can go here and get all the information you need about PCI compliance. But there's just kind of a little catch. Your processor really needs to be contacting you because a lot of the processors will not accept what's available on that MasterCard Visa website. They have their own method. And chances are, if you've been looking at your statement over time, there's been some message there that says you got to go to a website or you got to contact us or something. If you're ignoring that message, guarantee you're seeing a monthly charge, a non-compliant surcharge. You know, do whatever they say you have to do, because they're going to keep charging you. And frankly, they're probably going to charge you anyway. We talk to so many people that are processing with a terminal, and they're still getting hit with a $130, $150 annual fee or a monthly fee. And it shouldn't be that way when the free service is available. But there you go. But, you know, so I mean, it just depends. Your processor needs to be contacting you. You know, if you're seeing that charge on your statement, you need to be calling them and saying, why am I getting hit with this? What does this charge mean? Okay? And they are charging you. There is a cost. There's a legitimate cost if you're processing over the internet, because you do have to pay for those scans. And don't worry, those scans are of your IP address. They're not reading your mom's email. All they're doing is looking to be sure that your site, you know, isn't breachable. But you do have to pay for them quarterly, and your processor should be providing that to you.
So the processing company should be doing that automatically?
Well, they should at least be contacting you to arrange to get the scans done.
It is your responsibility as a merchant to contact the approved scanning vendor to set up your site to be scanned. And it's an annual fee, but you have to be quarterly, they check your compliance.
Yep.
And you generally are scanned monthly, but quarterly is when we have to report it.
Yes.
And we are responsible as a
You are
merchant
responsible
to
as a merchant.
reporting to the processing company that
Correct.
we have
Yes,
done this.
that it's
Correct.
done.
And if we haven't told them that we've done it, even
You are
if we have
non-compliant.
done it- Even if we have done it to a third-party company, we're non-compliant.
You're non-compliant.
Right, because they don't have record of that to report, because they have to report it to Visa MasterCard.
Yep.
And it's every computer that you
It's an IP address.
It's not based on the computers, it's based on your IP.
But I have one computer that's up in the bed and breakfast that's there for guest use, and then I have the one that's in my office, and I may confirm a reservation on both of those computers.
So each IP address.
Each
needs to
IP
be
address.
scanned.
Right.
Yes.
So you have multiple. If you have more than one IP address, each one has to be set
Yes.
up on individual scan.
Now,
Right.
the vendor we use will scan up to 10 IP addresses for one cost. So again, your processor should be telling you about that.
So the free site you were talking about that you can go and do all this, is that also where you would go when you're using Reservation Nexus and over to Billback and that sort of thing?
No.
Is that-
No.
They can give you a list of approved scanning
Yes.
vendors. However, you need to contact your processor because there are some processors that will not accept a scan from anyone but their approved vendor because they're getting a kickback from that vendor.
Yeah.
So, like, I have ResNexus, but I don't use their, in other words, I have a terminal and I process
Okay.
all of mine through a terminal.
So the only thing you should have to do is do the self-assessment questionnaire and file the attestation, just the paperwork every year. You should not have to be scanned as long as none of that information is coming to you electronically.
Okay.
That's right. So,
Question here.
oh yes.
If you use software that is PCI compliant, what do you need to do as a business owner? To process all of your credit card through the software that is PCI compliant?
You still need
It's not the
to
software.
prove your PCI compliance as the merchant. It's not the software.
It's
As
the
long as
IP
you're
address.
entering it in your if you're physically typing it in through your computer or swiping it on your computer and going through the software, you are responsible for being compliant. Your software needs to be compliant. If it's not, your processor probably wouldn't even let you use it.
Yeah.
If it's a dynamic IP address on your system and it changes periodically.
The scanner, when it does the scan, it'll find the IP.
Okay.
It finds it for you because mine does that too.
Like if you had an iPad, you're going to different places.
Mm-hmm. It'll find whatever, when it comes due to the scan, it'll find whatever IP it's going through and
Scan it for you.
scan whatever IP you're currently on.
Yeah.
So if you're just viewing credit card information, my credit card information is stored on a secure server. So if you're
Just viewing is okay.
then you don't need to be scanned.
Right. But the second that you download it or store it on your computer or anything like that, that's when you need to be compliant. Yep, you can look at those numbers, write them down if you have to. Do not retrieve them over the internet if you want to avoid the scans. Yes, sir.
I have 3 revenue streams in one location, and each revenue stream has a different machine.
Terminal?
Different terminal. I'm assuming that IP code that you're referring to is being utilized for all those terminals.
Yes, if you have multiple sites that you use, say you're running a business out of one computer, but you have 3 separate businesses, they're all on the same IP, you can put that scan would be for each one. I mean, you would only pay for one scan. You would just have to designate that each merchant ID was affected by that.
Yep, okay. Going to move on here a little bit. So what happens if you don't comply? Well, the original idea was that they were going to stop everybody from processing if you weren't compliant. Well, they figured out they'd lose a lot of money on that, and so they didn't carry through with that. But what will usually happen is that non-compliant surcharge you're seeing on your statement. You know, you're going to be getting charged for it. So again, watch your statement. You must be compliant. Now, some of you I know have not ever been contacted by your processor about PCI compliance. If you're one of those people, there's still a few of you out there, I really highly encourage you to go to the PCI Security Standards website, print the SIQ, fill it out yourself, and hang on to it. You know, because that way when your processor says, because it's up to you. You're responsible. So you do it yourself if your processor hasn't helped you get it done. Because you really do need to be compliant, and one day you're going to have to prove that if your processor has not done that for you.
But if you go back and show you filled it out
Yep.
and it's scanned, they're not going to
Nope.
return all the fees they charge you.
Well, you're never going to get those back anyway.
Right.
That's profit. You bet. We're not giving that up. Come on.
But if you're following you're getting your quarterly scan and all that, then they shouldn't be able to charge you that non-compliance fee, right?
Technically, they shouldn't,
Yeah.
but there are some that do, and they put it under additional fees.
Yeah.
And for more information, call us.
Yeah.
There's one processor we see quite frequently that does that. They charge $30 a month for additional fees, but to find out what those fees are, you have to call them.
But they can't be for PCI non-compliance.
They come up with a different
They can
thing
call
every
something
time
else.
somebody calls about them.
Yeah, exactly.
We have customers that have closed accounts with banks and turned around and got hit for $100. Well, that was for last year's PCI compliance, after they've canceled their account with these people.
Yeah.
They tried to do
They're going to do
that
it.
with me.
They're going to do it. Plain and
I
simple.
hired an attorney, and I got all those fees.
Yeah.
back.
If
Yeah.
you do that,
But
you
how
will
many
get your
people can
money
do
back.
that?
But many
And have
people
time to
won't.
do it?
Well,
Yeah.
the number justified my hiring an attorney.
Yes,
It
understood.
was a lot of money.
Yeah.
Yeah. So basically, the other thing, like I say, security. Don't worry about your sensitive information. If you are subject to scans, they're only scanning your IP address. They're not looking at what's stored on your computer or anything like that. They're just pinging your IP address. So don't worry about security, them doing the scans. They're not taking anything of your sensitive information. Now, something else I want you to watch for. You mentioned this earlier. There are a lot of scams out there. People are calling you and say, hey, your terminal's not compliant. You need to do something about that. That is simply not true. It's a ploy to get you to either enter into an equipment lease or to switch contracts. There are some things that you can watch for. There's something called truncation. Do any of you have credit card processing machines that are still printing the full credit card number? Okay, you are not compliant. Yeah, okay. But that's the one thing. That's the one thing. That's called truncation. That is a non-compliant terminal. So there's an odd issue with that, and you need to do something about that. Probably new programming, unless your terminal is really old.
You can probably just call your processor and say, hey, I'm not truncated, and they'll reprogram you to be truncated.
Well,
And you have an older terminal.
do you have a
Yeah.
Trans 330? Do you have a Trans 330?
Probably.
Okay.
Probably just a box. Yeah.
Yeah.
It's one of the ones that's portable.
Okay, wireless machines went non-compliant. A lot of wireless
Yeah.
machines are.
So yeah, programming may not fix it. You may have to, but you're rare. Usually, it's just a matter of changing the programming. Yes, sir.
What if it's come out on your statement, on what if it's come out on our statement, that you report at night the whole number, that's not on the credit card receipts?
It's printing out your batch reports?
Yes.
I think that's a programming issue again, too, isn't it?
Yeah, that is
That's
a programming.
programming.
If that's what we wanted, are we still non-compliant?
They're trying to get away from that because if you ever throw that away, that becomes a security risk.
But right now, is it?
You can get away with it.
It's
not
something you're going to watch
that's
for
gonna
rules
be a
down the road.
problem.
But
As
yeah,
long
so
as you secure your receipts.
truncating is the one thing that your terminal might not be compliant for, but otherwise it's a scam. They're calling you up and they say, "Ooh, there's these new rules and you got to have a new terminal." So what do? They talk you into a new lease or new equipment, and guess what? Nothing really changed. They didn't do anything for you. So except for truncation, you really should not need to upgrade your terminal. Most terminals are fine. Hopefully they're not that old. Yours isn't that old, is it? Yours isn't that old, is it? Okay, we think that one maybe sits in the Smithsonian, but we're not sure. Okay, so in summary, you have to be PCI compliant if you take credit cards in any way. How you do that, again, is going to depend on how you process. If you're over the internet, you got to have your quarterly scans. Watch your statement messages. Please read your statements. Read them every month. As much as they make you grumpy, read them. You need to know what's going on. Do not sign a lease for equipment if you can at all avoid it. Don't do it. You just don't need to do that. And be very wary of free terminals. If somebody tells you to give them something free, I'd be turning around and running the other way real fast. Okay? Now, these are some quick things I'm going to address because they're from questions I've gotten from you, to answer. One of the questions I get is, PIN pads, do I have to have one? No, you don't have to have one. I've had people tell me that their processors called and said, "Oh, no, you have to." No, you do not. Again, the use of a PIN pad has to do with taking debit cards, and what it does is it swipes it and it runs it down the bank highway rather than the credit highway. You can take a debit card and run it as a debit card. If you're on an interchange program, chances are the cost difference is going to be so little that you don't care that you have a PIN pad. The cost is so close that you really can't justify buying a PIN pad. You do not have to have a PIN pad. You can have one, but you don't need one. Okay? Batch fees is another thing I get. Everybody says, what about batch fees? Are they required? Well, they're another way of, they're a service. Your terminal's going to batch either automatically or manually. We personally set our terminals to auto batch so that you don't forget, because if transactions sit in a terminal more than 48 hours, guess what? You're downgraded. You pay more. So we make sure the batch for you, so in case you walk away at the end of the day and forget. That's what auto batch is. That's the difference. But if you manually batch, either way, you're going to see some batch fees.
Is there a fee for auto batch?
Nope. No difference.
Can you do it at the terminal?
Yeah.
Okay.
Yeah, you can. Either way, it's like I say, we set ours so that if you forget to do it at the terminal, it'll batch by the end of the day so that you don't get any
So
downgrades.
then we'll go ahead and print out that
Yep.
paper.
You'll come to it in the morning if you forgot the night before, and it'll be sitting on your terminal.
I need to do that.
Yes, you do. Yeah, you don't want to forget, because the longer that sits, the higher you pay. You're going to see some downgrades on that. Another question I get a lot is First Data. They'll say, "Hey, who's your bank?" And I say First Data, and they say, "Oh, I work with First Data." Well, there's a whole lot of First Datas out there, and you probably don't know that. A couple years ago, First Data allowed independent sales organizations like us to use the name First Data. It was a marketing tool, basically, and if our company wanted to be First Data, we could be First Data. Well, now what's happened is there are hundreds, if not more, First Datas out there, and none of them are the bank. They're all little independent sales organizations like we are. So First Data, are you working with First Data? Who are you working with, really? It's a company that used the name because it's good. It's got, it's like name recognition. Oh, you're with First Data. You're trustworthy.
Is that FDR?
Yes. Yeah.
Oh.
FDR is their acronym.
Yes. And let's see, one last thing, and I know I could do a whole lot more on this, chargebacks. Chargebacks are real important. We could do a whole other issue on chargebacks, but we don't have time. But I mention it for security reasons. As you know, and you guys in the reservation business, you're probably more prone to chargebacks than most because, people make reservations and they don't show or whatever. You charge them, they file a chargeback. But one of the things you need to do, if one of the reasons that you're getting chargebacks is card not present is not quite what I'm looking for, but if they file a chargeback and say, "Hey, that wasn't my charge, I didn't use it," what you guys need to be doing is collecting the CVV code on the back. Are you doing that now? Taking the information and collecting the CVV code. If you do that, you need to write it down. Here's the thing you need to know about it. The second that that transaction processes, you do have to block it out. You can't keep the CVV codes anymore. You used to. But once you've run that transaction and used the CVV code, the bank then has a record that you had it and that the transaction went through, and then that's going to be your proof for the chargeback. That, hey, I had the card in hand. They have an electronic record that you had the CVV code and you had the card. It'll help you avoid that one kind of chargeback. Yes?
Because we key in deposits and we get that code, is that also true? I mean, you're saying
Are you taking
not present.
Are you talking an auth code or?
No, what you're saying is when you key it in and you have the CVV code for a deposit,
right.
After you've keyed that in, you want to destroy that CVV code, and when they come in and do the charge again, if you're going to key it in, you need to ask them for that code again. You cannot store that code in any way, shape, or form.
Yep.
Okay,
You used to be able to. You can't now.
But if I had a chargeback issue on that,
then you can
key
say
in,
that whoever gave you that called-in reservation had that card in hand or had that security code, which makes it harder for them to do a chargeback because you would have had to physically have that information.
Yep.
To do
You
it.
couldn't have had it without having the card in hand, and that's going to be your defense against that particular kind of chargeback.
But surely if you swiped, you had the card.
If swiped, then you don't have to worry about the CVV code because
Yeah.
that's in the magnetic stripe. It's
Yeah.
only when you key in a card.
I've never had a terminal ask me for code. You need it.
Oh,
Most are not programmed for
it's
it.
then it's programming. You need your programming upgrade. You need to ask for full AVS and CVV and have your processor do that for you. So this is what the card looks like. You know, this is the code we're talking about right there. That's the little code that you want to have, but you can no longer keep once a transaction has processed. Now, one last thing, and I'm sorry, we're getting real close on time, and I know I'm going to have to let you go. Yeah, it's 9:33. Durbin Amendment. I don't know if any of you have heard of the Durbin Amendment. What that has to do, it hopefully has made a change for some of you with the cards that you're taking. This went into effect October 1, 2011, has to do with debit cards. The idea was that if people could write checks for free, that using your debit cards shouldn't have a really high cost either. So now what's happened is the Durbin Amendment has said that the processing bank, in other words, the bank who issued that card, can no longer get paid as high amount of money as it used to be. In other words, when you ran a debit card last year, the interchange rate was 0.95%. That has gone down to 0.05%. That's why it is that you saw the banks come out and say, hey, we want to charge $5 now for you to have a debit card. That's why. They had a significant reduction in rates. But here's the thing you need to know. That doesn't apply to every debit card. There are now regulated and unregulated debit cards. And here's the definition. If a bank and its affiliates have assets of $10 billion or more, they only get to be paid a nickel. If a bank and its affiliates have $10 billion or less in assets, they get paid higher rates. So what that means is if somebody comes to you probably with a Bank of America card, chances are you're going to get the Durbin rates for it. If the card came from your local credit union, maybe not. But what you're going to start seeing on Interchange program is you're going to see regulated and non-regulated charge. If you're taking cards from major processors, it's a good deal. You're going to see a nice change, hopefully, in your rates. But that's the Durbin Amendment. I think we're close. The end.